Hello, everybody, and welcome to Newgen's webinar, Cultivating a Digital Lending Ecosystem at Your Financial Institution. My name is Michael, and I'm part of the Products and Solutions team with Newgen, focusing specifically on banking and financial services. And I'll be one of your hosts today. I am also joined by one of our subject matter experts, Malik, who will also take us through examining some of the challenges facing financial institutions in cultivating a digital lending ecosystem. After that, I will also walk us through how Newgen helps financial institutions managing those challenges in order to create and facilitate a robust and efficient digital lending ecosystem. So without further ado, I'll go ahead and welcome Malik to go ahead and take it away.
Yeah, thank you, Mike. Thanks for the intro, and hello, everyone. Thanks for joining us today for this webinar that we hope will be of value to you and your respective organizations. So we're all aware of the last couple of years and the impact that COVID had on the banking world. And many new things have occurred that we've never thought about prior to that. What was most striking to me personally was the fact that most FIs thought it will have a devastating effect on their lending, when in fact most banks saw an increase in volumes, at least in the very beginning of the pandemic, around May to July 2020. But unfortunately, it had almost no impact on their balance sheet. Why, you ask? It's because interest rates have fallen drastically within within just a couple of months of the pandemic. If we go to the next slide, we can see that interest rates were on the upswing right up until 2019, but then dropped very quickly at the onset of the pandemic. And it continued to fall up until the end of Q1 of 2020, which was just about a couple of months ago. Interest rates, unfortunately, aren't anything that banks or credit unions can control. So of all the factors that can be tweaked, interest rates aren't one of them, since they're tied mainly to the prime rate. So an FI would look at a different source of income on its balance sheet, and it sees that non-interest income, or a lot of banks call it fee income, is also dwindling. And as we see from the next slide, that the main reason that the fee income is declining is, simply put, competition. We still see the Wells Fargo of the world charging heavily for their checking accounts, and most of the traditional banks still do. And while they often offer a free checking account that usually comes with at least a few conditions that are usually very difficult to reach, there are numerous online-only banks that started appearing just about 10 to 14 years ago that are now aggressively pursuing clients who prefer to well, keep the cash in their banks. I mean, they want to avoid fees at all costs. And these kind of digital banks, the Ally, Capital One, and Chime, offer just that. So these banks that most of us know, like I said, Ally, Capital One, and so forth, their main strategy has been to offer a free checking account in hopes to get a much bigger portfolio from each client in the long run. As the old adage says it in the banking world, once you have their checking account, you have their entire wallet. So their strategy is a long-term strategy to give them the free checking account to eventually get their mortgage and their car loans and stuff like that. So we see here that non-interest income is fairly controllable, at least more so than interest rates, but still has a lot to do with external factors such as competition. So in essence, this is still not a factor to rely upon completely to increase income. And I mentioned that competition is one of the main reasons that fee income is declining, but this competition isn't necessarily from other FIs of the same caliber. They're usually fintech companies that are ancient in the banking world. A survey, if you go to the next slide, Mike, we see here a survey that was done by Cornerstone Advisors. It was a survey that was directed to some executives of banks and credit unions, and they were asked if they see the following types of companies as a significant threat. And amazingly, just about 50% of these executives see that the big tech companies such as Apple and Amazon are in fact a serious threat in the next decade or so. The reason being is that they're already seeing these companies taking a bite out of the pie. Small as though it may be right now, the numbers show continuous and constant growth, which is where the real threat seems inevitable at this point. Statistics show that fintech companies are already winning in deposits already, as we see in the next slide. We can see that just about 60% of Gen Z and millennials use digital banks. The number here, as we can see from Gen X and baby boomers, is quite a bit less. However, if we look at the growth with Gen X just from 2021 to 2022, it's actually at 8% as opposed to previously steady growth of 4 to 6% in the previous years. Which just might indicate Gen X's willingness to go fully digital is just not a far out thought anymore. And the growth within this segment of the population is expected to keep growing at least in the same pace in the next several years. This pandemic really showed us that online is the way to go, and so Gen X is one of the generations that are not afraid to take on the challenges. That's why we see this growth here. For this reason, as financial institutions see these kind of data, a considerable percentage is actually a considerable percentage of banks and credit unions are discussing or already started a digital transformation strategy. What we see is that about 35% of US financial institutions are just about 50% done with their digital transformation. But we also see that only 3% have completed their transformation, digital transformation strategy, which is truly negligible. It's a very small number, seen as that fintech world is speeding through innovations at light speed, with new technology coming out very frequently to enhance customer experience and dial in efficiencies and customer fraud protection, to name just a few. So the question to keep in mind here is, how far along is your organization in your digital transformation strategy? Since the interest income is completely out of control and non-interest income is just only controllable to a certain degree, the only other factor that remains within the process, in fact, is efficiencies. So we see that if fee income decreases, if we'll go to the next slide, Mike, please. Thank you. If we see that the fee income decreases and efficiencies are increasing, that's a break-even point, because when you're decreasing the fee income, which, well, you're not decreasing the fee income, but the fee income is decreasing because of competition, the one thing you can do is dial in efficiency. And a lot of times that is a break-even. However, if fee income is decreasing at the same rate, but you dial in efficiencies to a really large level, that's a win for the bank. As an example, if you can reduce, let's say, your application input from 30 minutes to, let's say, 5 minutes, and if you can fund your loan with a click of a button rather than manually funding it to the core, which usually takes 30 minutes to an hour, or even more sometimes, depending on the core system that you have, you're spending more time tending to other clients. And those clients who are satisfied with the speed and efficiency of your service will offer you the best marketing, which is word of mouth. So to sum it up, in the next slide here, we have that we're faced with 3 issues at hand to manage. The first issue is a declining interest income, which necessitates increase in loan volume, and this is only controllable to a certain degree. A declining non-interest income, which can be corrected by making processes more efficient, that's slightly more controllable comparing to the previous issue. But the third one is a considerable competition from fintech companies that seem to be always one or a few steps ahead of the game comparing to banks and credit unions. So to remedy that, your your financial institution has the power base of knowledge in the banking world. And so to be able to compete with the fintech who rely mostly on technology, it really is best to partner with a tech company that can handle all that is new in banking technology and who can offer flexibility for future advancement through a very robust platform. So with that, I'm going to let my colleague Mike take this over to speak a little bit about the tech part of this presentation. Thank you, Mike.
Great, thank you, Malik. Those are some great insights to go ahead and share with our audience. To go ahead and continue on with the conversation and pick up where Malik had just left off. As we move forward, I will speak about how Newgen is able to help overcome these challenges and how Newgen has also proven itself through very successful client implementations, where Newgen is now part of financial institutions' mission-critical ecosystems. Now, to start off, I did want to give just a quick high-level overview of the Newgen system when it comes to the consumer loans. Now, our solution is omni-channel and cross-channel. So this means that applications can be started through any channel that you're offering. So of course on a PC or laptop, but also on a smartphone or tablet. And then if required, those applications can actually be stopped in one channel and then resumed through another. So if you have a customer or a member that's starting an application, if they need some help, if they run out of time, they get distracted, they'd be able to resume this application later and then pick up right where they had left off. Now, one of the goals of the solution is to make the process as frictionless as possible. So we do have different approaches for making this process easy and fast so that any data can be pre-filled. So for any existing customers and members, we can do integration with online banking, core banking, a cell phone provider to capture their personal information. We can also, for any new customers or members, do things like an ID extraction, where we can capture that ID and pre-fill all their details for them. Now, the solution does support all the various consumer lending products. So anything from the secured, unsecured loans, auto loans, home equity, credit cards, all of those all on the same platform. And within this platform, we do have different capabilities for underwriting. So this can include automated online underwriting. We're able to get those instant decisions, and we leverage these different third-party systems throughout the whole process. So ideally, you could have a customer apply with your financial institution's rules configured in the system, leveraging these third-party systems to pull in this data. We provide this automatic decisioning, and then without any human intervention, these loans can be automatically approved. Now, if required, if the borrower doesn't meet up with those requirements, we do have the full back office underwriting capabilities where the financial institution users can log into the system, do any reviews, follow-ups, and perform that financial institution underwriting there. We do also have real-time integration with the core. We ensure that all of the documents, the data are captured throughout the whole process. And we also do have a built-in rules engine to ensure that we also taking advantage of capturing this data to provide any cross-sell or upsell opportunities that might also be there as well. So kind of moving forward, first we'll take a look at some of the key points, as Malik had brought up earlier, in increasing volumes and various aspects around the solutions approach there. First, you certainly do have to have a strong online presence in this day and age. Most customers and members will specifically seek out a financial institution that provides them the ease and convenience of transacting entirely online if possible. So when deploying services online, what are some of the best practices are there? Well, firstly, you have to have a system that is omni-channel, meaning that it should be accessible from any device through any channel. So if the customer or member chooses to use a smartphone or tablet, it doesn't really matter. That online interface is going to have to automatically adjust and then maintain that consistent customer experience. Now, during the process, there are also different steps and best practices that should be taken to ensure that The customers are also easily able to use this online interface. So this can include capabilities to integrate with social media, to pre-fill personal information, or use a smartphone or tablet to capture and upload any supporting documents in real time. Also, the online interface should be able to handle the entire customer interaction lifecycle. So really, there should be no need to take those extra steps and time of downloading a mobile app in order to complete a portion of that process. Now, one of the key aspects in increasing volumes then would obviously to be ensure that you're doing all the necessary things to help reduce the abandonment rate. Now, Newgen's solution takes industry's best practices and incorporates it throughout the application lifecycle. One of those is making sure that applicants have clear instructions and prerequisites at the beginning of the process. So what we do is make sure that the applicants understand what will be required of them in order to complete the process in a single sitting or a single attempt. The idea is that if the applicant has everything that they need, such as proof of identity, proof of residence, proof of insurance, they'll be able to complete the application without having to stop to find some of the missing information or documents. Now, if the applicant must stop in the middle of the process, what we've seen is that there is a risk of them not returning back to the application to complete it. But if they do need to stop for some reason, whether this is because they ran out of time or became distracted, or they do need to locate some type of documents, we do provide the ability to save and exit the application so that they can come back and complete it at a later time. What happens is the system is able to send out an email with a link to return back to the application at the convenience of the borrower. So all their data is saved and they would be able to resume the application right where they left off. So there would be no need for them to have to rekey that information that they've already provided. And it makes it just really easy for them to go ahead and complete it once they're ready. Now, along the way, we also take different steps to help reduce any friction points, like autofilling the data that I had just mentioned shortly ago. For any of those existing customers, they can enter in their online banking credentials to automatically fill in the personal details. For any new customers, they can use an ID extraction. So we do take these different approaches to reduce that manual data entry to make the application process as easy as possible. Now, when it comes to reducing the abandonment rate, how can we measure this? The Newgen system does come out of the box with the built-in business activity monitor module. So throughout the entire loan lifecycle, everything that's happening in the system is being recorded. So this can be everything from application completion time, the various application statuses, approvals, processing times. And with this data, Newgen is able to provide these various reporting dashboards to give you a lot of insights on the entire loan lifecycle. Now, these reports can be functional, operational, investigative, and we also provide custom reports to each of our clients to make sure that you do have all the insights that are going to be tailored to your own financial institution. Now, to take the approach of increasing volume in order to tackle these declining interest income, you need to also ensure that your lending ecosystem is able to scale to the levels required for that increase in application volumes, as well as the number of users that are going to be working in the system in parallel. Now, with over 500 clients globally, the Newgen One platform is relied on by many organizations for mission-critical processes that have required the system to be continuously scaled and grown. Now, this same Newgen One platform that is being used by hundreds of financial institutions is also being used by organizations and other businesses, such as insurance, healthcare, and government, just to name a few of those. And within those sectors, Newgen has many clients that have required this to be scaled to a large degree. So on this slide, you can see a few examples. The first is a large, well-known bank that does have a presence in the US as well as across the globe. Now, this bank is utilizing the Newgen One platform in a scale where they are handling over 20,000 requests every single day, while the system is also being accessed by over 4,000 bank users. Another example is an Indian-based insurance company that has around 25,000 concurrent users accessing the platform that is also storing over 18 billion images and documents that are being accessed across multiple departments over multiple locations. So these are just a few examples where Newgen has been able to display its capabilities to be scaled to whatever degree is going to be required. Now, the final point I wanted to touch on when it comes to the point of increasing volumes to overcome declining interest is providing a first-in-class customer experience. Now, we've already touched on some of the points, but it's important to reiterate some of these key elements and best practices to keep in mind. Certainly, you want to have that omni-channel, device-responsive online presence for your customers. So this will provide that same positive, consistent experience regardless of which device is being used. You should also take steps to make the process as frictionless as possible by allowing customers to be able to automatically fill their data. So we have those different methods. So whether it's online banking, ID extraction, or even social media, we can do all of that. A short time ago, I mentioned about how Newgen provides the ability to save and resume the applications. And this is certainly important because we do have to accept that customers are going to potentially become distracted and should have the ability to come back to the application without having to start over. Now, something I hadn't mentioned earlier was that Newgen enables this feature without requiring that the applicant create a username or password. So it just makes it even easier to go ahead and continue. Finally, you want to ensure that for any customers that do need assistance, that they would be able to easily find and access any help that you would want to offer. So anything like chat or even appointment scheduling is going to be pretty easy for them to find and take advantage of. Now, earlier, Malik had talked about declining non-interest income and how this is disappearing. So how is Newgen able to help financial institutions overcome this challenge? By making the processes more efficient. The Newgen One platform comes with a robust business process management layer already built in. As part of this layer, the solution comes with the out-of-the-box workflow designer. And this is an agile low-code tool that Newgen uses to digitally transform lending processes and tailor it to each of its specific clients' requirements. Now, this is a drag and drop style of tool that allows for any workflow to be automated and digitized. This includes capabilities such as automated routing, escalations, SLAs, and automated events like document generation and notifications as well. Now, I do want to just be clear here that this is a tool that Newgen uses itself as part of the implementation cycle. So Newgen does all the heavy lifting in terms of the workflow creation. But as part of that cycle, we also train you on how to use this tool. So Newgen does not expect the financial institution to perform these configurations that are going to be needed to go live. However, going forward, if any changes or updates are needed, the financial institution is empowered to make those changes itself. As part of ensuring more efficient processes, Newgen's system has built-in validations to ensure first-time right processing every time. So this includes form-level validations to ensure that we're capturing proper formatting and business rules are being followed. There are also rules-based checklists available throughout, ensuring that all the data and documents are being captured, as well as all tasks being performed by each stakeholder throughout the entire process. As I've mentioned a couple times, Newgen ensures that each financial institution has their own requirements and rules configured into the system. And this helps standardize parts of the process, such as creating intelligent supporting document checklists, automating approval workflows, or even adding stipulations based upon various factors such as the loan type, the size, or borrower credit history. Efficiency in the process is further achieved by ensuring that the system requires only single data entry, meaning users never have to enter data more than once in the system. Newgen leverages various integration touch points to also enhance the system's capabilities by automatically capturing data from various systems in real time. So this can be systems like online banking and core banking for customer data, but also third-party systems like credit bureaus or NADA to pull in vehicle values. Now, all of these come together to help ensure an entirely paperless and digital process that allows financial institutions users to go ahead and work completely in the Newgen system, not having to work in multiple systems and multiple interfaces to be able to complete their tasks. And one of the points that Malik had discussed was the challenges of fintech as competition. So let's look at how financial institutions can overcome that by finding the right technology partner for the long run. Now, the Newgen One provides financial institutions a low-code platform upon which Newgen deploys solutions such as consumer lending origination. And this platform also comes in with, it comes with built-in agile tools that you can see here on the slide, such as the process designer, experience designer, business logic engine, all these different tools. And these are used to configure the processes to fulfill 100% of financial institutions' needs. Now, each of these agile tools add additional capabilities to the platform for creating comprehensive and efficient processes. A few examples are shown here on the slide, such as having different workflows for different types of loans, incorporating the financial institutions' decisioning criteria for automatic decisioning, capturing insights on applications, pipelines, approvals through the business dashboards, just to name a few. And so while Newgen uses these tools to tailor the solution to each financial institution's requirements, these are also still available to be used by the financial institutions after go live for any future changes. And since we know that change is inevitable, you do need a solution that is adaptable. So down the road, when those changes are coming, so any changes to policy, changes to regulations, changes in competition, you will have the ability to quickly adapt to those changes. Now, the last point on the slide is integration adapters, and I'll get into that a little bit deeper here on the next slide. One of Newgen's strengths is our extensive integration capabilities and experience. Newgen has a dedicated integration center of excellence team that focuses specifically on integrating third-party systems with the Newgen One platform. Leveraging these seamless bidirectional relationships helps to eliminate manual workarounds and having to work in disparate systems and interfaces. Newgen is able to also help facilitate an efficient process that also leads to a positive customer experience. So having all these systems in place also helps create that straight-through processing of loan applications, where loans are able to be approved without any human intervention in a completely digital environment. So I just wanted to be able to touch on Newgen as a company here before we open it up for any questions. Now, Newgen did just celebrate our 30th birthday. So we have been in business for quite some time now. We are serving over 500 clients across 70 countries. And we've really experienced a lot of growth here in the last 2 years, where we've picked up over 70 new clients. Specifically in the US, we have a strategic focus on the community financial institutions. So we've seen a lot of growth there with those type of financial institutions that are really seeking to digitally transform a lot of their processes. So whether it's account opening, consumer lending, commercial lending, we've seen a lot of positive experiences there. Newgen's platform is consistently recognized by analyst firms like Forrester and Gartner. So for our business process management, enterprise content management, as well as customer communication management capabilities. We do boast a very strong employee workforce of over 3,000 employees to be able to support all of our products and solutions, as well as we reinvest a lot, and we have our own research and development team to always keep us ahead of the curve on all the emerging technologies and solutions that are out there in the marketplace. So at this time, we did want to open it up for any questions from the audience. So if you do have any questions, please go ahead and enter it in, and we'll be able to answer those for you. And we do have one question here. What are some of the key challenges that you're seeing in digitizing lending? So that's a really great question. Some of the points that would be there that we've seen in challenges are the limitations from the core, from integrations, as well as some of the third-party systems. So certainly we are going to have to, throughout the process, collect data from multiple systems. And we've seen that some of the maybe the legacy systems or some of the other third-party systems may provide a little bit of a limitation there in exchanging that data. Also, even if we do want to digitize a lending process, we really need to ensure that this is a good process to begin with. Some of the financial institutions are open to having this digital environment, but want to keep the processes the same. And so we really try to work with our clients to provide best practices. So we involve, our team members like Malik that's been here as part of this webinar, who can share those best practices that have been there working with financial institutions for many years, can say, hey, this would work. Might work better than what you're doing now, to bring that to the table as part of the implementation. We do have another question here. What are the new technologies that you're seeing in lending? So one of the emerging technologies that there seems to be a lot of interest in is incorporating the use of AI or artificial intelligence as part of the lending lifecycle. So this can be very useful in identifying things like cross-selling opportunities. Another point that this can be utilized in is identifying loans that might not meet the requirements for your financial institution, but we can capture additional data around this borrower, and then we can automatically generate a counter offer that would be more suitable based upon their credit history or other factors that you'd like to incorporate as part of that decisioning. Also, we have seen some desire to use AI-based auto approvals and underwriting. So there's a lot of use cases that are there to really help make the processes more efficient with the use of AI as part of the lending process. And we do have another question here. What's the average time to implement? So typically what Newgen has seen is that we take around 4 to 6 months, but there's a lot of factors that go into this. So this can be very heavily dependent on the scope of the project. So how many types of loans are going to be digitized here? What are the number of integrations that are going to be required? There's a lot of different factors that can be there, the different document templates, requirements that could be there. But typically we've seen about 4 to 6 months. Also, one factor can be the financial institution. So while Newgen does create a team to work on each of our clients' implementation projects, we do understand that the financial institution users that are on this project, they still have their day jobs. They're not going to be able to devote the entire time to a consumer lending project. So we do work around them, and sometimes there's delays there or delays with the third-party system. So we always do also recommend that you start the discussions early with any of your third-party providers that would be part of the project as well. So go ahead and take a pause here and see if there's any other questions. Okay, it seems there's no other questions. So I just wanted to thank you for joining the webinar today. And also thank you, Malik, for your valuable insights that you provided. Thanks for joining.
Thank you, Mike. Much appreciated. Thank you very much. Thank you, everybody.